Good morning, friends. Welcome back to the sixth episode of State of the Market. Today is 13th June 2022. It's a fresh Monday. However, the markets are not looking good. And by this weekend, everyone knew that the markets are going to gap down a lot. However, we have to look at the objective side of how markets are going to behave today. As inflation globally is rising, central banks are increasing interest rates. That has kind of irritated investors and they are selling stocks across the world. But is this rational? We have to look logically before going into today's trade at 9 o'clock. It is natural for most of the retail traders to get feared by all the negative news around. We have to be very careful when we are assessing the market's move in such irrational time. Whenever there is fear gripping the market, most of the retailers get confused because they do not know what the market will do. This is the time when both investors and traders should be very careful and control their urge to behave irrationally. What I mean by this is whenever there is fear in the market, you need to take a step back and analyze the market objectively. You should not depend on your gut or instinct to sell or buy anything. First, you need to assess what the market is doing and then take a logical step for the trading day. Even if you're an investor, you should not just sell your entire portfolio just because the market is looking negative. It may or may not be negative today. Even it is possible that we'll open gap lower and then hit the high of the day. We may surpass Friday's high also. Anything can happen in the market. Because of this, we have to take a step back and look at the market objectively. Now, let's logically assess what the market has done so far and what it may do today. We won't know after 9 o'clock where the market will be. It can fall 500 points, it can rise 500 points. Every day, we have to go with such unbiased mind to assess the market. Now, let's dive into what is happening in Nifty on a daily time frame. So we closed it around 16,208. 16,228 is a very key level, key order flow level, and we closed it below that. So certainly it is negative. However, if you read the news, if you have read the news on Twitter or in newspapers or in televisions, what the market is doing or what the US market has done on Friday, everyone was feared that today we will gap down by, like, say, 500 points, or there may be big fall. It can be there, but we need to see whether such kind of irrationality will begin after 9 o'clock or not. First, let's look at what SGX is doing. SGX is not showing any great negativity. We are just 200 points down, and that is not big thing because it happens on a normal day as well. It's not just because of US inflation or something. It's just the scare that comes into the market at these levels. Let's look at the daily chart. Here, what is happening at this particular level, 15,770, you see that the market, whenever the market has come here, it is kind of taking a clean support here. But every time it is taking support, it is not going to a higher level. That is one key piece of information you have to go with. If you see, we are not going to a higher high after every fall. So here you see that every time we fall to 15,770, we are kind of going to a lower high. We are not going to a higher high. Until that happens, this kind of negativity will keep on coming back into the market. I will be negative on the market only on a close, on a daily close below 15,770. Until then, I'm not going to get scared. Even I will change my portfolio mix only when we close for the daily on below 15,770. Until then, we have to keep playing these small bounces and get on with the market. Now, what are the levels that we have to look for today in Nifty? In Nifty, we have to look at these three important levels. The first one is 16,155. So SGX shows that we are already below that level. So the next point of break is 15,955, which is also broken as per SGX. And now the key level that we have to look for is 15,770. Only a break of that will raise to a lot of panic in the market. And below that, 15,522 is the level where I would really start reassessing the market on an intraday basis. If we break 15,522 on an intraday basis, that is when I will really get scared, because there will be a kind of domino action from shorts, and we may go below another 2000 points easily over many weeks. So on an intraday basis, the first level that I will be looking for is 15,770, and below that 15,522. Let's look at Bank Nifty once. In Bank Nifty, the situation is dire. I have warned you that if we break 35,311, if we break 35,311, we are going to look at a break of around 2000 points. Because inflation is related to economy and economy is related to banks, Bank Nifty might go through recapitulation if we break this particular bottom. If we break 33,000, we may easily go back to the levels of 30,000 and 32,000 as well. So today on an intraday basis, what are the levels that I should look for? We should look for a break of 33,988 first. And below that, we should look for 33,400. Only a break of these two levels is going to bring any scare into the market. However, when retailers are scared and when they are worried about their portfolios as well as trades, that is when big boys come in and they will start lifting the market. So what are the levels you have to look for buying? You have to look for buying near 34,000 and 33,400 levels. These are the two broader levels that Bank Nifty traders should take care of on an intraday basis. Below this, I will keep updating in my live Telegram channel. Let's look at Reliance. As I have told you earlier, Reliance had to break below 2750. So because we close it below this, if we break 2700 levels, we may go all the way to 2676 and then 2598. I see support emerging only near 2556 levels. Only then we may see some kind of traction from buying. Until then, Reliance can also take a deeper cut today. However, beware that at these support levels, the market can always bounce back. I am expecting a bounce back near 15,770. If that does not happen, and if we close below 15,770, we are going to take a very deep cut. And that is going to lead to a larger fall over the next few weeks. Now, on the upside, because we need to bake in the hypothesis on the upside as well. On the upside, if I want to see the light of day for longs, it has to be about 16,150. Remember, if we break 16,150, again, we will look for levels which are 16,329 and then 16. If we go back above this short-term moving averages, again, the situation will be for longs. So, friends, today when you are going into the market, you have to look objectively and look for buying at key support levels. Only if that buying is not enough to make the market stand, you should go for selling. Otherwise, you remain with your portfolios and take the trades accordingly. Hope this edition has helped you a lot and have a great day. Trade safely. Bye bye, guys.